Hey boys and girls. So I'm doing the video early this week because I'm going away for a couple of days for the weekend. And FYI, next week I won't be making a video. Going away for a couple of days next week as well, and I won't be able to make the video. I'll be back the weekend after OPEX, but next week no video as well. So where are we? Everything is rallying. We have QQQ as the weakest index today. SPY is up big because IWM and DIA are okay, and QQ is doing fine as well. Not the best performing one. My my thesis for what's coming next is the following. So it's either a combination. It's either this, which is at the turn of the month, but not the literal turn of the month. In our case, it will be starting on Monday, and there are some data points pointing to this right now. I'll show it when we get to it. But basically, this was the Tesla stock split rally from here. So the market was already up quite a bit, and then the Tesla stock split and Tesla and Apple stock split rally gave us a blow off top, followed by a turn of the month correction going into quarterly OPEX. This was September OPEX. The correction was like 10%, and it happens at the turn of the month. This was on a Wednesday, I think, or Thursday. It started on a Thursday, September 3rd. For us, it should start on Monday, not necessarily on Monday, but either not later than Wednesday. I think most likely, more likely on Monday or on Tuesday. So if this is one scenario, the other scenario is we continue rallying until mid-month. So uh, more or less the same kind of situation, but the drop starts the week of OPEX. So not next week, the week after that. I think this one is less likely because we're already very high, and I'll explain when we get to it what to look out for and why. So we are very overextended. Let's look at the recap of the week. In yellow, I didn't put the text on it, but it's the current week's low, midpoint, and high. By the way, we have a sell on the hourly. Not necessarily that's a strong signal, but just it's. I think it's important because VVIX is not down. Well, anyway, we went down, bounced around the breakout AVWAP for a bit, then went down to the AVWAP, which more or less coincided with this level that I marked last week, and then we bounced from it and went up like crazy. Now we don't care that much about this one. What I would like to point out is that, let's take this one out. We are almost 4 standard deviation away from the AVWAP from this, and this is very overextended. Usually uh, we don't get this high, and the one from the we are at 4 standard deviation from it from the breakout AVWAP. So this is kind of concerning. We went too high too fast, and the fact that VVIX is not dropping today, it's even actually green. It bounced on a level, and the level is this. So we have overshoots here, but support, resistance here, then support here, resistance, hovered around it a bit, didn't know what to do, then support again, and now we are right at this level. And VVIX is the first one that moves. VIX is very low as well. We are almost at this trend line, so I thought we would have one more day or two of VIX crushes, but we dropped too much too fast, and I think we're very close to bouncing on VIX as well. This doesn't mean that the market will drop immediately. I think I can see a scenario in which VIX uh, either goes up slightly or stays flattish, uh, and the market still continues going up for a day or two. And the key here is IWM and DIA because they are breaking out right now. So they broke the downtrend. For example, IWM, that's the long-term trend line, but this is the short-term trend line. And we have a breakout here. IWM, same thing. This was the short-term trend line of this flag here. Oh, sorry, like this. And we have a breakout. Uh, and I think what for the bullish scenario in which we continue going up until mid May for OPEX, the only thing that needs to happen is for mega caps not to drop because both value and IWM stuff, small caps, will go up naturally because they were very oversold. This rally here will scale shorts, shorts will start covering, so we have the potential for short covering rally in value and small caps, and this will be enough to push the market up overall. The only thing that needs to happen is for QQQ names to not do anything. They should not drop. If they all they do is not drop, the market will continue going up, and even in spite of VIX staying flat. And if we look at mega caps here, we see that Tesla broke out as well. Apple is near the highs as well, but flattish. Apple flattish, Nvidia flattish, Google flattish, the other Google still flattish, Microsoft flattish, Meta flattish, Netflix flattish. Some is in it's in value, so we don't care about it. Amazon went up, getting rejected. What needs to happen is this all of this group except some needs to be neutral. Like for example, if one goes up, another one has to drop. So or a maximum of one or two go up per day, not a lot. The way QQQ is today with 0.7% up is still quite big. For the rally to continue beyond this point, they have to be flat. If they reverse and start dropping, then the whole market will drop. IWM will reverse down, and everything will stop. Even in this scenario in which everything goes up, we are limited in how high we can go. And the thing to look out for, these are the levels for IWM, and I think we will target this. The thing to look out for is RSI. As soon as RSI gets into overbought on IWM, small caps, and individual names, start getting the fuck out of longs like this. And as you can see, there's not a lot of room left. We have maybe 2 days like this one, maybe even one of similar movements. And let's look at a couple of names here, like CLF. Yes, it went up today, but the maximum we can reach is around 16, maybe not even that. Another day like today, another 10% up, and RSI will get, I don't know, to 65, something like that. And that's the point in which it will be short-term overbought, and the market can reverse strongly. And as soon as this reverses, it will have momentum to the downside. Um, Now back to this. So the key, what happened as well is HSI, big green dildo, on speculation that the government will intervene. Let's look at precedents. The last two big green dildos were this one on November 1st, 5%. Yesterday was 4%, 4%. And the previous one, the one after that, was a continuation one after a dip buy, and it was 5% again. So I think the candle today is similar to this ones here. The difference is I don't think there's a lot of room to go up. The natural resistance will be probably 20k, but excluding the fact that we know OPEX is coming and it will have a negative impact on price, and everything is very uh, malpositioned or imbalancedly positioned in equities, this looks extremely bullish. And going back to the analogy to the Tesla and Apple stock split rally, the way I expect this to unfold, even if we go down, is with a double bottom like this. So you can see the double bottom here. And this right here will be the bull bear pivot for the rest of the year. Let's assume the drop starts next week. We drop. That drop will almost certainly be bought up. And depending on how much we drop by OPEX, we will bounce up and retest the current highs. So let's go to, having said this, let's take a look at what it would look like for just for the sake of argument. I have to hide all these things. Group hide. Let's leave this for now. Okay, and let's turn the moving averages because we care about those. So let's assume Monday we start dropping and the cutoff date is June 16th. This is the window to drop. We start dropping. First support here, or let's say 420. 420 now becomes support. And we look at the 20 MA, which would do something like this. If we drop, it will start curling down. And the 50 MA would probably do something like this. Our most likely target is, well, this too steep. Let's do it something like this. Our most likely target is the 50 MA. So we drop, and then we reverse up. And the other cutoff date is the end of the month, June 30th. We have another rally. Then we have the quarterly roll off and another big drop, and we drop again. This time probably to the same level, like a double bottom, like I said. And first mega question is what happens here? If this one holds, this is literally a bull market. Like we will go back up, this level will be taken out, and we continue up. We probably retest the all-time highs by end of year. This will also be interesting to see. Like that's only an assumption, but what happens here could is another question. Like for if we get rejected, we could just make this our next sideways going range for 17 to 430 or for 415 to 430, let's say. But I'm pretty sure that if we start dropping next week and we hold on the 50 MA, we will retest the highs by end of month, and then we will drop again going into July. And the big level to see what happens is going to be this. And don't take this that literally. Like we could also go to even lower, like this area. So the 100 MA. For the 2020 drop, which was 10%. Actually, let's count it by 10%. Let's assume a 10% drop as well. It was the 100 MA that in purple here that was the support. So let's just count out 10% from the current top and see how low it takes us. Whoa, the fuck, that's a ton. No, I'm counting something wrong. That can be 10%. Oh no, never mind, it is. 10% is 384. That's a ton. I don't see that happening. So probably like 5%. Did I count it right here? It was much lower. That's probably, it was 10%. Well, it is what it is. That's what the numbers say. That's what the numbers are. Yeah, 10% is because 42. I'm not. So yeah, this would be probably a new bear market territory thing. So I don't think that's happening. But the thing we should be looking at is not necessarily the percentages, but the historic precedent of the 50 MA and 100 MA. And like a move here, which would be even below the 200 MA, is like a, I don't know, 8 standard deviation move by here, which is literally impossible. While the 100 MA is more would be here. Even the 200 MA here at 396 is very, very overextended, and it would have to just literally crash to get here that quickly. So target is 50 MA, and if that doesn't hold, it would be the 100 MA. Yeah, didn't think this through with the 10% distance, but something like this, and then we go back and do this. Okay, so this being said, kill everything. This being said, let's go back into micro detail and look at how this can play out. I would still like to see a blow-off move here next week, go slightly above 330 or as close to 330 as can be, and then we get the reversal. I will be shorting big at 430 and not looking back. Then it drops. This should be a support at 420, 422. Actually like this, let's say. And keep in mind this doesn't need to happen. It's already super overextended, but it goes up. It now finds this to be resistance. It goes down more, and we go down to the previous week's mid or last this week's low. Around here, we should see a bounce, and that bounce can take us back to here by end of month. This is daily, so it's overextended. I drew it right the other time when it was uh, with the correct time frames, but you get the idea. So this is my expectation for next week, but the drop has to start on Monday or Tuesday. If this doesn't drop, I don't know. Look at RSI when we get overbought on daily. Look at the names that are going up now. I had a couple marked. Let's say, actually, let's look at Baba. So Baba still has a lot of room to go, but uh, that doesn't mean the index has to go big with it as well. So something like get to 94 and then get rejected, it seems plausible for the drop here, the drop like I mentioned. The only secret is for the mega caps not to fall, like I said. So another day or two of mega caps not falling but being flattish is more than enough for the market to go up on small caps and value stuff, and then we drop. For SPY, this trend line here, the bull bear pivot, should see a rejection to it. We're now above it with the breakout, but don't know if it will hold. Yeah, I guess this is kind of it. I'll post a screenshot in the post with this as well, and no delta stuff because I didn't have time to do it, and the week is not over yet. I can just look at a couple of the charts. Tesla breakout and going exponential. RSI nearly the highest in quite a while, but it can be even higher. I would say this area would be the target if it continues. 222. Apple, nothing's changed. Might see very close to the all-time high. Nvidia, actually got rejected at the Fibonacci level, and now it's going sideways. Google with a rejection. Google doesn't look that good here. Amazon hit the supply zone here. These are all crazy. Like there's nothing for me to talk about. They're going on pure fumes. Nothing is rational about them going up. Oh my God, Meta almost filled the gap. Oh no, the gap starts here. My bad. It just fills the gap areas. Gap is 317. Netflix trying as well. For some, what I want to say about this one, I'm quite bullish on it, but keep in mind that it will depend on what the Saudis decide on the OPEC meeting. So let's say we have something like this. And we get a breakdown here, then a back test, then the back test fails to break down, like meaning to make a new low to go much lower. And then it goes higher and makes retest the highs. We have a very similar situation here. Trend line doesn't matter that much, but the idea is something like this. And we had a breakdown, we had a back test, and that back test failed to make a real breakdown. Like we made the marginally lower high, a lower low, but it didn't break down. And now we are going back up again. If we recapture the trend line, I would expect some to go back towards 120, back in this area here. But again, I'm not bullish on it. I'm quite bearish on oil, but this would be the last move like this. The next breakdown will actually be a breakdown. Nothing will stop it from going down. So if you want to load up on shorts on oil, this will be the time here when if and when some goes to this area. And this is true for all other uh, oil stocks. For Oxy, which has the cleanest the cleanest wick-off pattern, I think it just goes and does this. Maybe goes a bit higher and it looks like a breakout and then it fails, but it's very close to the wick-off breakdown. CVS and what Pfizer looking good. Still building up for a big move. Yeah, that's kind of it. So to recap, look for a reversal next week. Target is initially 420, then 415 area, and depending on how fast this goes, but that would be like 50 MA or 100 MA, depending on how quickly it goes down and how strongly it may go beyond that, but I doubt it. When we drop to those levels, it is still a dip buy. Don't assume we break down before OPEX. This will be a longer drawn out process. It won't happen now. We will go back up, and maybe at the end of the month we will have that big breakdown when we go for the double bottom pattern, like this, go back up, go back down, and this at the end of the month is when we may get a breakdown that has legs. Until then, no. Okay, have a good weekend. Good luck next week. Bye bye.